Welcome to another ETF review from the Next Chapter team. Today's ETF review is going to focus on 4 different ETFs from Fidelity. These 4 ETFs, we're going to do a deep dive on each one. Then we'll take a look at what it would look like if you invested consistently in all 4 funds for a 5 and 10 year span of time. Before we jump into the review, please take a moment to like, subscribe, and share. Help the channel grow. Now, sit back, relax, and get ready for another ETF review from the Next Chapter team. All right, before we jump into the review, we're going to do a quick recap on what an ETF is, an exchange traded fund, and how to buy them. All right, today's ETF review will go over the Enhanced Fidelity Large Cap Enhanced Value, then the Fidelity Enhanced Mid Cap, then Fidelity Enhanced Small Cap, they love enhanced, and then finally Fidelity MSCI Consumer Discretionary Index ETF. What exactly is an ETF? Well, basically, it's a big basket of investment securities. Usually includes stock, bonds, or other traded commodities. ETFs prices change all day, just like a stock. ETFs tend to have low expense ratios and fewer brokerage commission fees than mutual funds. Now, how do you buy an ETF? Well, first you determine which account you're going to buy in, usually an IRA or a brokerage account, an individual retirement account. Why? Because usually ETFs are not available in your 401k. Unless you are a self-employed person, in which case your self-employed 401k, you can have whatever you want in there. All right, second up, you figure out which investment broker you're going to work with. And then third, you decide on how frequently you're going to buy. Weekly, bi-weekly, monthly, whatever it may be, just make it consistent. And then from there, set it up to be automatic. When you sit there and say, okay, these are the funds I'm going to work with, set it up to automatically transfer in and automatically purchase. Some brokerage firms will let you just buy automatically. You don't have to do a 2-step process. Now double check as you set up your account with your firm. Investment brokers that you could work with, and there are so many out there, just do your research and make sure they meet your needs. Ones that you could work with: Fidelity, Webull, M1 Finance, Charles Schwab, E-Trade, and TIAA CREF. For each ETF, we're going to look at the ETF category, fund benchmark, fund summary, expense recap, top holdings, and fund performance. Jumping into the first one that goes by ticker of FELV, this was the Fidelity Enhanced Large Cap. This one is the category of large value. This seeks to track against the Russell 1000 Value Index and expense ratio of 0.18. That means for every 10K, it is $18. And what do you get with that? You get 359 total holdings. What are in the top holdings? Berkshire Hathaway B, JP Morgan Chase, ExxonMobil, Walmart, United Healthcare Group, Bank of America Corporation, Procter & Gamble, Johnson & Johnson, Philip Morris, and General Aerospace. Now, I love this little breakout. You don't always see this, but your top 10 make up about 19%. Top 20, about 28%, and your top 50 of those 359 make up about 48%, or 47.94. What sectors do you get? You get the sectors of financials at 21.4, healthcare at 16.33, and then industrials at 16.19. Then after that, everything else is under 10%, but you get a nice wide array. You get things like information technology, consumer staples, consumer discretionaries, energy, materials, communication services, utilities, real estate, and finally, a multi-sector. That's their way of saying other. Let's take a look at that performance. What do we get? Pay close attention to the bottom of the screen. All right, your 1 year 28.16, 3 year 9.55, 5 year 11.83, and finally 10 year of 9.78. Jumping into the next one, your mid-cap blend. This one goes by FMDE. This one tracks against the Russell Mid-Cap Index, expense ratio of 0.23, which means for every $10,000, $23 in annual expenses for this one. Now, how many companies do you get with this one? You get 322 for FMDE. All right, top holdings include Bank of New York Mellon, Simon PPT Group, INC, that's a REIT, Williams Company, Commons, INC, Ross Stores, DR Horton, INC, Vistar, Monolithic Power Systems, an aerospace company, and Prudential Financial. And all right, again, I love it. You can see your top 10 make up about 9.08, your top 20 of those 322 make up 16.67, and your top 50 make up 36.3. What sectors do you get? Let's take a look. Your financials at 16.42, industrials at 16.34, information technology at 13.2, consumer discretionary at 12.71, healthcare at 10.93. After that, everything else is under 10%, but you get sectors like real estate, materials, utilities, energy, consumer staples, communication services, and then that multi-sector, aka other. All right, again, take a look at the bottom of the screen. Let's talk about your performance. 1 year, 33.43, love it. 3 year, 8.04. 5 year, 12.62, like that one a lot. And 10 year, 10.19. Our third fund, FESM. This one is our Fidelity Enhanced Small Cap. This is a small cap blend. This one tracks against the Russell 2000 index. That's our small cap index. Expense ratio 0.28, which means for every 10K, it is $28 annually. Top 10 holdings of the 623. Strauss Farm Market, INC, FTAI Aviation, Carpenter Technology, Commvault Systems, Install Building Prods, Fabrite, Abercrombie & Fitch, Lumen Technologies, Q2 Holdings, and MI Housing INC. Those top holdings, top 10 make up 7.80, top 20 make up 14.08, top 50 make up 29.45. Let's look at that sector breakdown. Your sector breakdown, 17.35 for financials, industrials at 17.03, healthcare at 16.27, information technology at 13.81. After that, everything else is under 10%, so you got consumer discretionary, real estate, materials, energy, communication services, consumer staples, multi-sector, and utilities. Now let's jump into that performance. Our 1 year is at 30.78, 3 year 5.73, 5 year 11.95, and finally 10 year at 9.47. Not bad for this ETF. Jumping into our last fund for today's review, this is the Fidelity MSCI Consumer Discretionary Index. So again, this is a consumer cyclical play, and this one has expense recap of 0.084. So that means for every $10,000, we'd have roughly $8.40 of expenses annually. And how many companies do we get for this one? 276 different companies. Companies including Amazon, Tesla, Home Depot, McDonald's, Lowe's, Booking Holdings, TJX Companies, Starbucks, Nike INC, and one that I'm going to butcher the name, so I'm not going to say it. Mercado Libre. Okay, there you go. Anyway, the top 10 holdings make up about 57.94. The top 20, 68.15. Top 50, 80.98. And so that's your top 50 of these 276 different stocks. All right, sub-industries. Let's take a look at what do we have here. We have broadline retail at 24.57, automobile manufacturing at 14.85, and restaurants at 11.01. From there, you have everything under 10%, home improvement retail, hotels, resorts, home building, apparel retail, automotive retail, footwear, casinos and gaming, other specialty retail, apparel, accessories, and luxury goods, automotive parts and equipment, and finally, leisure products. Now let's jump into the fun stuff. Let's see what it looks like for performance. 1 year, 27.68, 3 year, 4.19, 5 year, 15.03, 10 year, 13.86. Now let's take a look at what it would look like if you invested consistently in all four funds for a 5 and 10 year span of time. Let's jump into the spreadsheets. For today's example, we're going to have someone who's investing consistently in an investment account, $8,500 annually. And again, we're looking at four different funds. Our first one, our large cap, has a 1 year return of 28.16, our 5 year 11.83, our 10 year 9.78. Next up, our enhanced mid cap fund, 1 year of 33.49, 5 year 12.62, and 10 year of 10.19. Next up is our small cap. This one had a 1 year of 30.79, 5 year 11.95, 10 year 9.47. finally, our rounding out our list is our consumer discretionary. 1 year, 27.68, 5 year, 15.03, 10 year, 13.86. Now let's see what it would look like if you invested consistently in all four funds. All right, because we're consistent investors and we like to do more than 1 year, well, let's take a look at that 5 year. All right, our 5 year, we would have had roughly 62,000. So what's that breakdown? So we would have invested cash of about 42,500, and then our growth on that investment would have been 31% or $19,500. So again, it would have been broken up to roughly 2/3 in invested dollars and then 1/3 in growth, or 69% and 31% in growth. Now let's take a look at the 10 year. Let's see if we make some big money here. Big numbers, love it. 157, balance is almost 50-50. I love it when you start to see a breakaway on that growth. That growth is trying to surpass that invested capital. So all right, so check it out. Your invested capital, $8,500 for 10 years, $85,000. Love it. What's the growth on it? $72,000. So 54% of your balance would have been invested cash, 88,500, 85,000, and then your growth, the remaining balance, would have been 46% or 72,000. Hope you enjoyed this ETF review. So many more to come.
Hey, thanks for staying to the end. This video is brought to you by the Next Chapter team. If you enjoyed the video, please take a moment to hit that like button, drop a comment, subscribe, share with your friends and family. This will help the channel reach out to more individuals just like you. We offer one-on-one coaching where we work with people and small businesses to determine a clear path to achieving their financial goals. This includes things like budgeting to reduce debts, planning for big purchases, and even learning how to build wealth with the tools that you have readily available to you. So please see our link below to schedule a free 30-minute call with our team to talk through coaching and understanding your current financial situation. Also, check out some of our affiliate links below for high yield savings account. This is a great place to put your money when you're saving up for those big purchases and your emergency fund. Check out some of our videos right here. And please enjoy and see you in the next video.